Do it. I think it's recording, right? It's recording. All right, it's recording. What's going on, MSC Teach? I am BW. I've been part of the original MSC for since like last year, beginning of last year, and as we continue to grow and I know we switched servers, but I really like that what we're doing, and I really like that you guys are really engaged and trying to learn. So thank you guys for tuning in on a Sunday. You guys could be anywhere, but you guys are here trying to learn. So yeah, let's get right into it. Today I kind of want to have a conversation first. So hopefully you guys can engage and be part of this conversation. So I don't know if you guys tuned into Jordan's last class. He said, he was like, oh, I've been getting bored, right? He day trades, he scalps on the 1 minute, he swing trades, right? And I don't know if you caught it, but I told him, hey, I think you're a discretionary trader. That's why. Does anybody know what a discretionary trader is? No, no. Basically, right? It's what everybody is in a way, right? A discretionary trader is someone who makes trades that are, it's subjective. Their judgment is subjective. They rely on their experience. They, make their interpretations of like the market conditions, right? If they trade bull flags, bull pennants, um, morning star, evening stars, right? It really is discretionary, and depending on whatever time frame you use, what skills you learn, what tools you have, right? So what is the opposite of discretionary? Like for everything I said right now, right? You make subjective decisions. It's your interpretation. So, 1 minute you might be trading one strategy, the next you might be trading, pattern, right? And it could be successful. You could be successful being a discretionary trader because 99%, 95% of people really are discretionary traders, right? Um, but what is the opposite of discretionary trader? Does anyone want to take a guess? Here's what I found. Man, stop, Siri. The opposite of a discretionary trader. Anybody want to take a guess? All right. It's an automated trader, right? So based off of what I've already given you on what a discretionary trader is, let's type that in. Discretionary trader. All right, and let's take some notes. Let's do this. All right. Subjective judgment. All right. Do another one. Relies on skills and intuition. All right. And freedom to adjust strategies, all right, based on their assessment. All right. So what is the opposite of this, which is automated trader? All right, Tracy says trade only a particular pattern, right? That is part of it. Right, so the subjective, right, based off your intuition. So an automated trader, right, it's basically a systemic trader. They have a system in place. And if one of their system is particular pattern, right? They work on making that entry for that particular pattern the best that they can, right? Whether that means looking for, overbought, oversold, looking at multiple time frames. They specifically work on making that pattern the best it could be. And whenever they see that pattern, they trade that pattern, right? Can that have more than one? Can an automated trader have more than one pattern that they trade? Yes, but they focus on making that specific trading setup with backtesting the best they can. So every time they see that pattern with all of those criterias, they take it, right? So systemic trading, let's put rules to execute trades really without so much human interaction, let's say, right? Systemic trading with the rules to execute without human interaction. So you built that system for trading that particular pattern, so where every single time it does what you wrote down that you back tested, you take it, right? That's why a lot of people have like scanners, right? A lot of people have like built algorithms, right? Those are all part of some type of automated trader, automated trading, right? Another thing that they can do is have predetermined risk, right? Knowing, all right, within my system, let's say I trade SPY, I buy $100 contracts. Every time I set a take profit and I set a stop loss, let's say they use it. Normally, you don't want to use it on a dollar amount, but let's just say every time it hits $15, it automatically takes profit for me. And every time it drops $10, it automatically stops me out. All right. So it's called set and forget, right? They set their predetermined stop loss and take profit and they walk away, right? It doesn't have to be a scalping mode. Usually when people do this, it's for the bigger time frames, right? So they could swing trade or they can use the 15 hourly. So it has some more wiggle room. If you're scalping, you're going to hit minus $10 in like 1 second sometimes, right? So that's why they have predetermined risks. They have systems, right? It's not technically just scalping, right? They use scanners. So let's put that, right? Scanners and other algorithms. Scanners, algos, right? So what are the pros and cons of discretionary traders, which we all are, right? We all are basically discretionary traders. So what are the pros? Anybody want to say anything, unmute themselves, or type it in? Let's see. Let's just do pros. Engage quick entries. You don't have to be on trades like institutional trader. You don't have to be on trades like. So Alexis, are you saying that for discretionary traders? What does that mean? Like you could trade in between like the big supply and demand areas and big.
Yeah. So, brother.
Okay.
So what I meant was like institutional traders have like they do that for a living. We have like more leverage. We can do that freely whenever we want.
Yeah,
So
yeah.
institutional traders, like they had to trade, they had to be on a trade. That's what they do for a living.
Adapt to market sentiment and let's say dynamics.
Changes.
All right. Whereas an automated trader, right? Let's say you have a system and you tested it, and every single time it hits all of those criterias, you have to take them 100 out of 100 times, right? And even if you're like, oh, we're in a downtrend, but it fit my criteria, you have to take it, right? Because that's the reason why you back tested 100 times, 1,000 times, right? But with a discretionary trader, if you see that we're in a downtrend and there's like economic news like FOMC, and you're like, you know what? I'm gonna stay away from this bear flag that I see because news comes out in 30 minutes, right? But automated trader might take it and might get their predetermined risk taken out. And that sucks, but you have to take it. Whereas this one, you could choose not to. You could be flexible. I like that. Thank you. Yeah, can turn a
For
scalp to
sure.
a day trade if the chart still holds up. Yeah, right. So automated traders say you have you have a preset take profit for your strategy, and it took you out 15%, but it ran all day, right? A discretionary trader can sometimes be like, you know what, I'm gonna swing this, right? We just took out all highs and we have full time frame continuity. So yeah, we can adjust your contracts uh based off of volatility, right? Well, and right, you could also like trim and do other things where right here, your partials are TPs, right? So yep. Okay, so what is the pros of an automated trader? Because they both are ways to trade. There's not one way to trade, like I said. What are the pros of an automated trader? Because I think this is important. Um, I can give one. You know, patience. All right, patience. And since yeah, patience, you wait for your setups to meet all of the criteria. And let's say overnight stress-free, set it and forget. Yep, the set and forget allows you to be less um, emotional, right? Less emotional. And that's very important because a discretionary trader, like you're sometimes I find myself doing it as well, where I'm looking at the P&L, right? But if you have a set and forget predetermined risk, you're not going to be affected because you know that, hey, I can only risk 2% of my account on each trade, and if I get stopped out, I'm not losing 40% because I have a stop loss set at 12% or 10%, right? Whereas if you're discretionary, I'll move my stop loss, right? No emotions. Yeah, exactly. More predictable, less stress, less anxiety. Yeah. So I guess that kind of adds to what the pros are, right? What the cons are, right? The cons are, you know, what are the cons of a discretionary trader, right? If you had to be subjective on your judgment, you rely on your skills and your intuition versus the rest of the market, right? And you have the freedom to adjust your strategies based on your assessment, right? The cons are maybe moving your stop loss, all right? Moving it and then moving it and moving, and then next thing you know, you're down 50%. All right. Intuition skills. What if the skills that you have is still somewhat rudimentary, right? Sometimes I don't know about you guys, but I'm continuously learning in the market, right? The market's ever changing. There's cycles, there's earnings, there's news, and you might be like, hey, I saw we were breaking out of a bull flag. But if you look on the 4 hour, you're like, oh man, I don't know if you guys trade this trap, but it's a three down, right? A three down on the 4 hour, and I'm trying to play a mini bull flag, which means that I have to either take profits quickly because we're in a bigger time frame downtrend, or I might be in profit, not take profits, and then now turn green into red, right? So I guess the reason why I wanted to share this with you is because most of us, as we're building our strategies, we're all here. And uh, it doesn't matter if you're a beginner, intermediate, or a professional trader, right? You can always, take notes, and you can always get a little bit better each day, right? Versus if you're trading a system, which you've actually back tested and you actually, made sure that you get a proper risk to reward ratio, that, you know, it may not be as lucrative sometimes as a discretionary trader. You can get rich quick sometimes. That's what people always try to strive for, even though that shouldn't be what we're here for, right? We're here to build good habits and create a system that works for us and it doesn't cause us to be stressful and does and could, give us ultimate profits at the end, right? We can't make 100, lose 100. An automated trader, right? But the cons of an automated trader is that scanners and algos may be difficult for us to understand, right? Having a systemic rules where, let's say you have 4 different confluences have to touch, and you may miss out in so many different opportunities because you're like, dang, it hit 3 of the 4. And if it hit the fourth one, I could enter, but it never did. So I had to sit here and watch the trade go or the price action go where I thought it was going to go, but I couldn't get in, right? So there's pros and cons to both. But what if I, suggested that for those of you guys who are here, could it be possible that you guys, you know, take from the qualities and the characteristics of an automated trader? Could you guys incorporate a little bit more of these things to help you become less emotional, right? And help you become more patient for your setups, right? So I just wanted to kind of start this conversation with this. I think it's important that you know, you guys have at least a criteria for your trading setup, right? So let's hop into the charts and keeping this in mind. Maybe I'll come back to this. But so one of the criteria, for example, is I don't know if you guys ever heard of like smart money concepts. I'm not a professional smart money concepts person, right? There's like obviously the ICT, the guy who created Inner Circle Trader created it. So I'm not going to speak on his behalf, but there's concepts that he teaches um, within his strategy that is used by a lot of traders today, a lot of forex traders, a lot of options traders, and I'm just going to go over a couple of them. So and then I can kind of build upon one of the strategies that I have right in my trading system. Oh yeah, another thing I want to say too is that when you hear about successful people, right, as a successful, like a professional athlete or a coach, right? If I say Phil Jackson, right, who is Phil Jackson and what is he known for, right? Hopefully, if you guys follow basketball, right, you'd be like, oh, he's part of Michael Jordan's 6 rings, Kobe Bryant's 5 rings, but he's known for, adding Tex Winters and incorporating the triangle offense, right? And the triangle offense is a system, right, in which you're reacting off of whatever the defense is giving you, right? You have the triangle where people are set in a position, and if one person moves one way, then it's free floating. So it's if you can just get into that routine and get into position and you'll be there's and move the ball around, there's always going to be an opportunity, but you have to be patient, right? So trading is not just having a strategy, but having a strategy in a system, right? So let's say I'm just playing breakouts, but there has to be a reason why you're playing breakouts. Or I'm playing retests. There could be a reason why you're taking retests, right? So right here, right, in the ICT concept, as I mentioned before, right, we have a high, a low, and then a high. So the term for this, I don't know if you guys have heard, as this is called a break of structure, right? Again, this is a break of structure. So what I do, right? Let's say we're going up, down, break of structure, right? Oops. break a structure, and now it comes down like this, right? Let's move this back over here. This really should be a little lower. Okay. Break a structure, break a structure. So the first thing I would kind of promote, right, is understanding the terminology. So it's easier for you to kind of create your system personal to you. So we have high, low, high, low. These are break-up structures, right? And usually down here, they're either mini order blocks or supply zones. Usually supplies at the very top, demand is at the very bottom. But that's called external liquidity, and inside is called internal. So this internal is liquidity is taken out, internal liquidity is taken out. But if this is the last one and it was taken out, that would be the external liquidity being taken out. But since we get a high here and we break this low, this is called either a change of character or a market structure shift, right? Where we break the lows after we take out buy side liquidity. We take out this pivot high, break a structure, but now we come down, we take out this low. Usually in between here now, what we're looking for are either little mini at smaller time frame, uh, pivot high, pivot lows, or what I like to trade inside here are fair value gaps. All right. We come right back down here, touch, right? Sometimes it does this and it does another fair value gap in here. Right. So if we do come up, we push down to try to target these liquidities. Right. So let's say it was another liquidity here. We target this, and eventually we want to target, right, the pivot highs, pivot lows. Right. This is just the general idea of it. Right. Same thing. If we're doing bullish, right, this is low, lower low. So we got to break a structure, now change the character because now we created a new high. So it's called change of character or market structure shift. So when we get a market structure shift, normally we don't want to chase, right? We want to wait for a retest because we want to kind of get price at a discount. Unless price for me on my criteria and for the, I guess, the general ICT concept is that you want to get price back at a discount. So you take the swing high, swing low, or if there's a mini zone right here, a breaker block, then we can take it from here. But you don't want to catch if the fair value gap, if the price stop like right here, for example, you're not going to get it because you're not at a discount, right? You need price to at least touch the 50% in order for us to take out swing high. Let's say this was a swing high, take out the swing high and take out this swing high, right? And if all the swing highs are very close together, right? This is called a low, what was that word? Low resistance liquidity or something, right? Where all the highs are very close. So if we're going to take one out, we're probably going to take all of them out, which is kind of like a PMG, right? If you trade the strat. So this is just an example of the criteria. And what I would like to see when we get this, right, is that we have our RSI right here. I would like to see some type of bullish divergence, right? So we need to sweep some type of liquidity. We need to have some, we don't need to, but I would like to see some type of bullish divergence where the RSI is coming up and this is coming down. And when price creates this displacement where we do a market structure shift or change of character, right, with volume, I would like to get priced at a discount. You see how there's so many different criteria in order for me to enter the trade, which I would enter right here. Oops. Which I would enter right here at the discount. Why is it like this? Oh, there, because it was all upside down. Okay, I flipped the chart. Okay, and with having a fair value gap gives you a predetermined risk. Predetermined risk is that if we get a close above here, I'm out. But because I bought price at a discount, I'm not chasing. And if I'm wrong, I'm wrong, right? But I got a discount. If I got it here, my stop loss would be all the way up here, right? If I'm chasing, getting short because I saw a breakout. Now, look at this risk to reward, right? I want to get it at a discount. Stop loss above fair value gap. Does that make sense to you guys? This is just an example. You don't have to trade it. There's other things you could trade too, like trend line breaks and other things. But there's just an idea of how I'm a discretionary trader, but by having this criteria and having kind of like little strategies with my confluences, this allows me to not be compelled to trade anything until I get this market structure shift. Sometimes this might be midday, or sometimes this might be the opening morning. So does anybody have any comments? I'll give you guys a minute while I take a sip of this water.
That was beautiful explained, brother.
What's that?
So that was beautifully explained. Good
Awesome,
stuff.
awesome. Yes, this is recorded. iPhone 5. So, all right, let me give you an example now of, actual chart, and let's see if we can find, oops, see if we can find, let's see if we can find an example, right? Let's go back to, this is the 6th. So this is the Tuesday, right? Tuesday. So we have the 5-minute time frame. So let's go see what the candle does for us, right? I don't know if anybody traded a break on Tuesday when we broke the previous day low, right? This was actually one that I see fake a lot of people out, where we started the day like this, right? Where we broke pre-market lows with displacement, and then we broke the previous day lows with displacement, right? But if you guys look what happened here, right? Even though we closed below, it's important to look at multiple time frames. Because look at the 15 minutes, right? We have buy side, sell side liquidity on the previous day high lows. So once I get liquidity swept, what do I look for? A market structure shift or a change of character to the upside, right? So 15 minutes passes, we get a morning star, right? We closed above the 50% retracement up here. So most likely we're going to at least touch here. So let's see what happens. Boom. So this is a market structure shift, right? Well, actually, technically, it would probably be here. So let's just let's be patient, right? Market structure shift would be above here. Okay, we get a market structure shift and we get a fair value gap after taking out liquidity. All right, we took out the liquidity on the 15 minutes. Morning star here. I have the VWAP just for practice here. Sometimes I have it on, sometimes I don't have it on, but it helps me with the morning range when I see that price is actually reversing on the VWAP, right? Then I know that we're pushing bullish, especially with the RSI. We're oversold or oversold. We're coming up. But do I enter right here with my criteria? Right? Market structure, I need a liquidity, and then I need a market structure shift. And then, do I enter here for calls after this first fair value gap? Why do I not enter calls on this fair value gap right here? Anybody? All right. Well, because it doesn't hit 50% of the retracement, right? I'm not getting price at a discount. I'm just chasing the first breakout, right? So let's delete this. And remember, the difference between being just a discretionary trader and having characteristics of an automated trader is that you create your criteria and you wait until your criteria are met. And if all your criteria are met, you take that trade. And then after you take that trade, you could actually journal it without having to journal 12 trades, right? Let's say you have criteria and you realize that it hit only one time today. Well, that's good data that you're collecting, right? So I don't take it because it's not at a discount, right?
Hey,
Yep.
um, just to add on to that, that's so fire, bro. Another thing that you can do with your structure shift, you see how you didn't want to enter in on that red candle.
Mm-hmm.
Put the put a line, a horizontal line on the opening of that red candle, which would be our resistance, and then it turns support, right? Do a horizontal line so it can go all the way across.
Oh, okay, got it, got it. Yeah.
Now go left and you see that big green candle when where it try to I'm sorry, all the way to your left, it was like an impulse candle that gapped up, a green one. All
This.
to your right is in the middle of your chart,
Oh, this one.
right there. Yeah. So anything that closes above that candlestick is going to be bullish. Draw a horizontal line there, and you can see how the price action will play against it. That's where your bulls are entering for any kind of calls.
For the pre-market highs.
Exactly.
Yeah. Okay. Yeah. So that's one way to do it, right? If you want to trade that, but right, if you have issue with chasing all the time and you don't have good market structure intuition like Moody, and you wanted to wait for your criteria to be met, right? You get a pullback. And a lot of times where people get calls right here and then this happens and they sell, right? That's the issue. But what we're talking about earlier is if we have a high low, right? If price hits your discount at the fair value gap, right? This is where you would want to enter trades, right? You would have your either some people wait for the trigger, right? Or they'll have like automatic buy and stop loss is a close below fair value gap. And you see how we just touched this, took out this liquidity, right? And when you have this entry like this, your target would be swing high over here. And remember I was mentioning earlier where people have automated systems where they backtested, where they set and forget. They have their set stop loss, right? And they have their step take profits and they walk away because it's going to hit one or the other, right? Unless you have 0 day expirations, then it could just expire worthless. But, right, why would this be a good retest entry, right? Oh, hold it. Oh, it took out the swing high. My bad. My apologies. It took out this liquidity swing high first, right? My apologies. So this would really be your first target um for this, right? We get because now we got like internal liquidity swept right here, and that would be your target for where you get in and where you get out. Sorry. So a lot of times people do chase, right? And it would pull back on them and they would sell right here. So this is an example of a using the strategy um of waiting for a retest, getting at a discount, having a market structure shift after liquidity is taken out. And those are the criteria that you have for, like, let's say, like if you're building your strategy. So I'm not saying this is the one way you could trade it, but if you have like these criterias, you could write it down, and then that would organize the way you build your trading strategy, right? So right here is a good 4 to 1 risk reward ratio, and yeah, and to close below here obviously would be a stop loss, but you already look for to take out liquidity, as I mentioned before, right? You want to take out this liquidity first. When we took it out, it's called a double top, right? And we come right back down. Let's see what happens, right? Now we're taking down this liquidity right here, right? Let's see. Does anybody have any questions on this? Did it make sense? I kind of went through it real quick, um, but I just wanted to kind of check in with you guys first, right? Did those things make sense to
Hi,
go
I
over your
just have
head?
a quick question. Hello.
Yes.
Where do you get the Fibonacci lines? Are they
Just like
already
the third,
preset? Oh, okay.
it's just right here. I know a lot of people have
Fibonacci
different,
retracement.
yeah, a lot of people have different ones, but uh, I have mine like this, and it's just
So did you
50%.
preset your numbers, or that's how you set it? Okay.
Yeah, 0, 1, 50.
Okay.
Yeah, 0, 1, 50. And remember, you want to take the swing high, swing lows, and you want to get price under 50. If it's over 50, you're chasing. You're not getting at it. It's a premium, and this is a discount. So that's why you set your here, and you look for pivot highs. So I missed this one. I kind of jumped the gun, but yeah, it's pivot highs.
So with that trade, would you say where you got in at the fair value gap, that was a good entry, or you should have waited, or?
Oh no, the target that I had up here was just kind of crazy, but yeah, usually what you want to do is um yeah, you go for if you enter it on the fair value gap, right? Like right here. Sorry, I got the magnets on. Then you want to target pivot highs
Oh, the
first.
next swing high. Okay.
Yeah, yeah. Sorry, yeah, that's the one. And even if you chased, like after you waited for that confirmation for this one, this is 5 minute candle. So you could have entered right here too. Just like let's say you wanted to make sure it closed because at some point this was a big red candle and you're scared. But once we closed above here, then it's just a touch. We touched here. So you can get in here. Your stop loss would just be right here. And you're going for swing highs. So since this is a 5 minute the 5 minute chart, then yeah, you go for 5 minute swing highs. Same thing with like 1 minute, same thing. But that's why you want to use multiple time frame analysis, just like how people would get faked out on a close here. Like I said, the 15 minutes is just a wick.
But being that it can end up retracing and coming back down, that's just like, is it just giving you another entry, maybe?
No, there's no entry
Right.
yet because yeah, we wanted to like that was the criteria of you need liquidity taken out, which we got liquidity taken out. Let's see. We have another info. This I had oversold, I had liquidity being taken out, and then we had a market structure shift. So those three things let me have this trade. But since we double topped
Okay.
here, like some people can just play a double top with somewhat of a divergence, right? This is a different strategy in which you have to back test and create for yourself, which is something that I'm working on too as well, is where this is slightly higher, right? This is slightly higher, and this is slightly lower. So this is a divergence, double top, liquidity is taken out right here. Liquidity is taken out. And yeah, we could just play we could play a reversal back down to take out this liquidity, in which we did. Right.
Okay. So you would have got out right at that swing high at the top.
Yeah,
Right.
yeah.
Yeah. Okay. And then just played another play to the downside.
If yeah, but if that was your strategy is to wait for a rejection here, and you can play the downside. But for this one, like just like this one ripped, you don't play the first one, right? You wanted to make sure we touch on discount, right? Right.
Right.
This
That's
double
what I
top
struggle
would
with.
be an entry, and if some people who do entries like where we get a rejection like this, and let's say we rip down like here, then you can, for example, if you're building your strategy, you would say, I got to put right here, my stop would be high of this candle, then your target would be
Down
swing
there.
right here.
Right.
So you got to write that down and be like, every time I see a double top after, liquidity is taken out or something, or after we see a divergence double top, and then we get some type of bearish candle like this, then your stop is clearly just as soon as it closes above here on the 5 minutes, you're out. And your target is the swing low.
Okay.
Right.
Yeah, that's what I
So
struggle
that's
with, not knowing
1,
when to get out.
2, 3. That's 3. Right. And you have a predetermined risk, all right? Predetermined risk and predetermined target. So
Okay.
So that's what you have to identify when you're building your strategy. Not, oh, I saw us pushing up and, I got calls because
Right.
I see a trend line break, but that's only one confluence. So the fact that I waited right here, right? You waited for, these 4 things. I would have to take the trade at what time is this? 8:25 Pacific. So I would have had to wait like 2 hours before I entered a trade so I can just capture this double top. Right. And this whole time, like there's other strategies in here that you could trade, but for the one that I gave an example for, it wasn't. So if your trade strategy wasn't there, you shouldn't be trading at all. Right? That makes sense?
Yes, got it.
Yeah.
I really
So
struggle with getting out of a trade, knowing when to get out the trade, thinking it might go
yeah.
higher and end up reversing.
Yeah, there's other ways to go about that. Staying in trades, right? Like it could just be let's see, right? Some people just do moving averages or trend lines, right? For example, I'm not saying there's so many different ways to do it. But let's say you got a call because there was a trend line break here. This is your strategy. I play a trend line break on the 5 minutes with strong volume, right? So let's say you entered a call right here, right, on the breakout on this 2 up green candle. Your predetermined risk would probably be low of like this little structure right here. As soon as it's below here, this trend line was broken. And you want to have a target. Let's say you want to go for this pivot high right here, right? You can either get out here, but once price, let's say they're using the, you could use a trend line to the upside afterwards, right? Trend line to the upside afterwards. And once the trend line is broken, you get out, right?
Mm-hmm.
Or once this moving average was broken, you get out. So there's different ways you can do it. That's why it's important to find out what it is, and so you can do it every single time instead of guessing, right? But if you had a
Mm-hmm.
target, right, which was this pivot high, right? You see a green red pivot high, then you would have been out right here right before it took out even more. And let's say like because if if you're here, most likely, we're not trading with like 20 contracts or whatever. So you just have to get in, get out, and build your system the right way. So you don't have to like, be continuing to build this system like 2 years from now, right? And it's so personal to where it works for some other people because of not only their capital or what makes sense in their head, but that's why you can't copy anybody's system, right? That fair value gap ICT concept is something you can learn, but it has to make sense to you. A trend line break can be something you can learn, but it has to make sense to you. So you want to try to make less human errors by having every single time it breaks, I'm out. Every single time that breaks, I'm out. You know what I mean? So you can be more
Mm-hmm.
consistent with what you're winning and losing. And then now after a while, you're like, every single time I try to play this, every single time I play a trend line break, right, on the 5 minute candle, how long does it go? Well, it just took out this liquidity and it reversed on me. So next time you know that, if you play a trend line break, the first liquidity you could try to take, for example, right, for a scalp. So yeah, let's just do one more example. Let's fast forward into there was another day that was very similar. Okay, I think this did the same thing. Go sell side liquidity. I think this did the same thing, right? So the high up here. Let's go 5 minutes. Yeah, see, this week it actually did the same thing 2 times. Two times on Tuesday and on Thursday, right? We did the same thing where we kind of broke the previous day low and did a reversal. So one of the things that you could have done, let's see, right? Just like the example I showed earlier, there was also some type of trend line here that was broken. Put my magnets on. There was a trend line here that was broken, or if you want to just take it from the highs of here, it was broken. Then some people would play this, right? And the target would be liquidity. So you always got to have a target, at least if you're trying to build a system. And touch it. There we go. And we touch it, right? So it makes it a lot easier for you to kind of anticipate where things are going instead of looking candle by candle, right? So if we're breaking here, and you got a stop loss here and your target's right here, and you see a lot of like consolidation, a lot of these types of things right here, is you see a lot of consolidation right here and the upsloping support. Usually when we break out, we're gonna take a target, and we broke out right here. Right. So yeah, that's why the conversation that we had earlier about the pros and the cons is that there's a lot of pros of being a discretionary trader, but we got to find ways to where we can organize the way we plan our trades and how we have better intuition and skills. Because right here, it relies on skills and intuition, right? People like Moody and Jordan, who are professional traders, right? They recognize things, and they've looked at charts with hundreds of hours, thousands of hours of that. So they have a better pulse on what the market is. But if you don't, set up a checklist and try trading off of it for a week, 2 weeks, 3 weeks, and then you'll realize in a month it may be boring because you're waiting a lot, but you're going to be not losing money, as much money, if that makes sense. Right. So yeah. Any questions? I guess that's the most of the gist I wanted to cover today on building a system. So an example too is that here's another thing. This is the same day I took notes on, right? Try to map out a day and find the confluences that you see that day, right? So this is the day that we just saw. Previous day liquidity taken out. We had a trend line break that broke. Price pushed above the VWAP on the 15 minutes, right? So you got, and then the target is buy side liquidity. So you got 1, 2, 3, 4, right? And then on 5 minutes, it was oversold. Okay, I think this is the, oops, sorry, I got a lot of notes. Let me see notes. Right, so take as much notes like this, right, and then try to create a system where it fits or hits all these criteria. Okay, so yeah, I'll leave it at that. Thanks for tuning in, guys. If you guys have nothing else to say, I'll just stop this recording and I'll post this later.